You are broke, your car needs insurance, and every single company wants a few $100s just to turn the key. You have heard about something called no down payment car insurance, and you are wondering if it is real or just another marketing lie designed to get your phone number. Here is the truth that nobody else will tell you. Legitimate no down payment car insurance exists, but not the way you think. And if you sign up for the wrong kind, you could end up paying 30% more for coverage, or worse, you could get your policy canceled the moment you miss a payment. Today, I am going to show you exactly how to get car insurance with little to no money down using methods that are 100% legal and actually work in the US, the UK, and Canada. By the end of this video, you will understand the 3 different ways to start a car insurance policy with minimal upfront cash. I will name the specific companies that offer the lowest first payments, from GEICO at $43 to new pay-as-you-go options that let you start coverage for under $20. You will learn the dangerous no-deposit scams that could leave you driving uninsured. And I will give you a step-by-step action plan to get a policy started today, even if you have bad credit, an imperfect driving record, or just $20 in your pocket. Let me start by clearing up the biggest myth about no down payment insurance. There is no such thing as free car insurance. Every legitimate insurer requires some money up front before they will cover you. The reason is simple. The moment your policy starts, the insurance company is taking on financial risk. They might have to pay a claim on your very first day. They need to verify that your payment method works and that you are serious about the coverage. That upfront payment, often called a deposit or down payment, is what gets the policy active. Now here is the pattern interrupt that most people miss. When insurance companies advertise no down payment, they almost never mean $0. What they actually mean is that you only have to pay your first month's premium to start the policy. That is it. No extra deposit fee. No big lump sum. Just the first month's bill. According to MoneyGeek's analysis, the cheapest first payment in the country right now is from GEICO at just $43 for minimum liability coverage. Travelers comes in at $50 and State Farm at $52. That first payment is not a fee. It counts toward your total premium and covers your first 30 days of protection. So if you have $43, you can start a policy with GEICO today. That is the reality of no down payment car insurance in 2026. But there are even more creative options that let you get behind the wheel for even less. Let me break this down into 3 segments. First, I will cover the traditional no down payment options from major insurers. Second, I will introduce you to the new wave of pay-as-you-go and on-demand insurance that can start for practically nothing. Third, I will explain the UK and Canadian markets and give you the dangerous truth about no deposit scams to avoid. Segment 1. The best no down payment insurers in the US. According to WalletHub's analysis, the best cheap car insurance with no deposit comes from GEICO, AAA, and USAA. GEICO is the overall winner for affordability, with a first payment as low as $43 per month for minimum coverage. USA is even cheaper for those who qualify, but it is only available to military members, veterans, and their families. AAA also offers low monthly rates and a wide range of discounts. MoneyGeek's research, which analyzed over 2 million quotes from 607 insurance companies, confirms that GEICO, Travelers, and State Farm are the best places to start. Their data shows that monthly plans keep your first payment as low as possible. Paying for the full year costs less overall, but it means more money due at once. If you need to keep costs down right now, a monthly plan with GEICO, Travelers, or State Farm is the safest bet. Drivers should get quotes from at least 3 insurers because the gap between the cheapest and most expensive option for the same driver can exceed $200 per month. That is more than enough reason to shop around. But here is the honest truth. Even with these companies, you still need that first payment. There is no way around it. That leads us to segment 2, the new wave of pay-as-you-go and on-demand insurance. This is where the market has changed dramatically in the last few years. New companies have emerged that offer truly minimal upfront costs, sometimes as low as $0. However, and this is a big however, they have significant trade-offs that you need to understand. The most innovative option is Ocho. According to their website, Ocho is currently the only company offering true $0 down because they finance the down payment for you. They front your premium upfront to partner carriers, and then you repay through manageable, interest-free installments. That means you can get instant coverage with no deposit required, and coverage begins immediately upon approval, even before your first payment processes. Many drivers start with $0 down or just their first installment of $60 to $150. That is a game changer for anyone living paycheck to paycheck. The catch is that Ocho is a digital broker that operates in limited markets. It is not available everywhere. But if you need coverage today and have literally no money, Ocho is worth checking immediately. Another option is Hugo Insurance. Hugo offers pay-as-you-go auto coverage with no down payment at all. Their minimum coverage starts at around $121 per month, which is higher than GEICO, but you can pay daily or weekly, and you can pause coverage at any time. Hugo is available in 16 states with plans to expand. The trade-off is that their rates are generally higher than traditional insurers, but the flexibility and zero upfront cost make it a viable option for drivers who cannot pay a lump sum. ClearCover has also launched a new flexible auto insurance product, specifically in Florida, that promises no fees and no surprises. Their model is designed to improve affordability and expand access to coverage. If you live in Florida, ClearCover is worth a look. Then there is the pay-per-mile model. Companies like Buy Miles in the UK and Metromile in the US before its acquisition offer a different kind of solution. You pay a small base rate each day, typically around 30 to 60 cents, plus a few cents for every mile you drive. The upfront cost is often just the first day's base rate, which could be less than $1. This is perfect for low-mileage drivers who do not drive every day. Buy Miles, for example, charges a fixed cost for when your car is parked, and then you pay per mile for what you actually drive. If you drive very little, your total bill stays very low. Now let me talk about segment 3. The UK and Canadian markets and the scams to avoid. In the UK, the system is different. According to Confused.com, you will not find a true no-deposit car insurance policy where you do not have to pay anything upfront. Policies that advertise having no deposit usually just split the payments evenly across all 12 months, which can make them much more affordable. Some monthly policies include a higher payment for the first month. Your best bet in the UK is to use comparison sites like Money Supermarket or Confused.com to find the cheapest monthly payment plan. Admiral, Aviva, and Hastings Direct are consistently among the most competitive. Paying annually is always cheaper, but if you cannot afford it, monthly plans are your only option. One clever trick is to use a 0% purchase credit card to pay your annual premium up front, then pay off the credit card over time. That gives you the lower annual rate without the large lump sum all at once. In Canada, the situation is similar. Most major insurers like Intact, TD, and Desjardins offer monthly payment plans that reduce the upfront burden. According to Rates.ca, The best car insurance companies in Canada for 2026 include CAA Insurance and Gore, both of which offer flexible payment options. You will rarely find a true zero-down policy, but you can often start with as little as 1 month's premium. The key is to use a comparison tool like Rates. Say to compare over 50 quotes at once. And remember, in Canada, paying monthly typically costs more due to installment fees, but the lower upfront cost can be worth it. Now here is the pattern interrupt that could save you thousands, the dangerous scam that you must avoid. As Consumer Affairs reports, no down payment car insurance is often a marketing ploy. Some smaller, less reputable carriers will advertise no money down, but then hit you with hidden processing fees of $10 to $15 per payment. Worse, their premiums can run up to 30% higher than traditional policies. And if you miss even one payment, they can cancel your coverage immediately, leaving you uninsured and facing a lapse penalty that raises your future premiums for years. According to Ezra Peterson, Vice President of Insurance at Way.com, legitimate no-down payment car insurance does not exist. It is a marketing ploy to drive calls and clicks. Always read the fine print. Avoid any company that asks for your bank account information without clearly showing you your total monthly cost. And never ever drive without insurance, thinking you have coverage when you do not. So how do you actually get insured with little to no money down today? Let me give you a 3-step action plan. Step 1. Start with the legitimate major insurers. Go to GEICO, Travelers, or State Farm. Get a quote for minimum liability coverage with a monthly payment plan. If you have $43, you can start a policy with GEICO today. That is your first and most straightforward option. Step 2. If you need a lower upfront cost, explore pay-as-you-go or on-demand options. Check Ocho to see if they operate in your state. Look into Hugo Insurance if you are in one of their 16 states. Consider pay-per-mile options like Buy Miles in the UK or Metromile if available in your area. These options often have even lower upfront costs, sometimes zero. Step 3. If you are in the UK, use a 0% purchase credit card to pay your annual premium upfront. That gives you the cheaper annual rate without the large lump sum. If you are in Canada, use a comparison site like Rates. CA to find the lowest monthly payment plan. Here are 3 real-world examples of how different drivers use these strategies to get insured with minimal upfront cash. Maria in Texas needed car insurance to get to her new job. She had only $50 in her account. She got a quote from GEICO for minimum liability coverage at $43 per month. She paid that amount online, printed her insurance card, and was on the road within 15 minutes. 6 months later, she switched to a full coverage policy with the same company. She built her insurance history without going broke. David in Florida had $0 to his name but needed coverage immediately for a delivery gig. He found Ocho, which offered him 0 down with bi-weekly payments of $65. He was insured the same day. He paid his first payment 2 weeks after starting coverage. That flexibility kept him legal and working. Priya in the UK was a low-mileage driver who only drove twice a week. She signed up for Buy Miles pay-per-mile insurance. Her first payment was just the base daily rate, less than £10. She pays a few pence per mile and never has to come up with a large lump sum. Over a full year, she saves hundreds compared to a traditional policy. Now let me recap the key takeaways. Number 1. Legitimate no down payment insurance means paying only your first month's premium, not $0. Number 2. GEICO offers the cheapest first payment at just $43 for minimum liability coverage. Travelers and State Farm are close behind. Number 3. New insurtechs like Ocho and Hugo offer true 0 down or very low